Welcome back, dear traders. Our analysts are ready to share their views and to forecast when the New York session is already in a full swing. The highly volatile session on a Wednesday ended with a sharp decrease of the benchmark stock indexes. The reason is obvious: the Federal Reserve and its policy decision. The rate increase by 75 basis points did not come as a bombshell, as the market had already priced in the rate hike of this size. However, the comments of the Fed Chairman Jerome Powell wrecked optimism. Investors' hopes crashed post the Fed's meeting, which pushed the major stock indexes steeply down. The Dow Jones lost more than 500 points, or 1.55%. The Nasdaq incurred the heaviest losses of 3.36%. The S&P 500 shed 2.50% to close at 3,759. The pre-market on Thursday cemented investors' risk aversion and accelerated the decline on Wall Street indexes. Investors are still absorbing the comments from the Fed's chairman and the mulling over potential risks. Sentiment on Wall Street is also dampened by the US dollar's rally, the Bank of England's policy meeting, and the fresh data on the US labor market. The data on the labor market is causing the same headache as the inflation data. And in this context, the major indexes traded in the red in the New York pre-market. The S&P 500 is expected to trade in the intraday corridor between 3,650 and 3,800 points. The widely expected policy decision on the rate hike of 75 basis points could have brought some relief on Wall Street, but the comments from the Jerome Powell pushed the stocks sharply down. The chairman said that it's premature to think about the pause in the cycle of monetary tightening. The S&P logged the sharpest intraday fall yesterday since October 7. The stock indexes had been already under pressure in the light of the ADP employment data. Following the press conference, the indexes extended their fall. On the one hand, Powell said that the Fed could ease the pace of further rate hikes. On the other hand, he said that the ultimate level of the official funds rate could be higher than expected. Besides, policymakers supply other tools until inflation is tamed. Now, investors are speculating on the ultimate size of the funds rate. At the meeting in September, the consensus suggested the interest rate could stand at 4.50 or 4.75% next year. But now, Fed funds futures indicate a 50-50 chance of the interest rate at 5% or even higher. There is a slim chance that interest rates could be trimmed until December 2023. The market has detected a change in the Fed's rhetoric. The fast cycle of rate hikes this year was arranged as a prompt countermeasure against high inflation, and now the Federal Reserve has fine-tuned its agenda. Further rate hikes will be slower but longer. Jerome Powell sent this message to the markets, and the central bank is poised to prolong the cycle with slower rate hikes. So traders have to revise their strategies. Futures on the US stock indexes went down, signaling another sell-off. The data on the US labor market released today will hardly calm down investors. The number of first-time jobless claims increased by 217,000 last week, and 1,000 fewer than the revised figure for the previous week, and 3,000 fewer than the consensus. Until labor costs in the non-farm sector rose by 3.5% in the third quarter, below the consensus of the 4.1% growth and steeply lower than the 8.9% increase in the previous quarter. Now, market participants are looking forward to the official non-farm payrolls, which are due on Friday. The highlight of the next week will be a monthly report on the consumer prices. As for corporate reports, Qualcomm shares plunged by 8.1%. Because the revenue forecast for the final quarter is roughly $2 billion lower than the previous one. The stocks of Apple, Tesla, Microsoft, Amazon and Meta traded mixed in the pre-market. More companies such as Starbucks, PayPal, ConocoPhillips, Warner Bros. And Moderna are due to report on their quarterly earnings tonight. No wonder Powell's statements and the downbeat data on the labor market encouraged the US dollar's rally across the board. The intraday corridor for its index is between 112.80 and 113.50. Unlike its rivals in the basket of major currencies, the US dollar has bring prospects today. The greenback is been in favor with the investors, so while the Bank of England is going to announce its policy update and the ECB is pondering how to catch up with the US Fed. The overvalued US dollar poses a threat to global trade. Nevertheless, even the dovish Fed will hardly dampen its luster. Today, the U.S. Consensus Bureau revealed worse than expected trade balance data. The U.S. trade deficit increased in September to a 3-month high of $73.3 billion from $65.7 billion in August. The region surpassed the consensus of $72.2 billion. Imports rose by 1.5% to $331.3 billion. Whereas exports declined by 1.1% to $258 billion. The greenback's rally and another fall in oil prices dealt a blow to the Canadian dollar. The loonie is also losing ground today, though at a slower pace than other major currencies. The USD has gained 0.45% today, trading within the intraday corridor between 1.3740 and 1.3860. Despite foreign oil prices and the greenback's strength, the loonie has some fundamentals to find support. The fresh macroeconomic data confirms the resilience of the Canadian economy despite global economic headwinds. Canada's trade balance data did not come to expectations, but locked growth in a profit. The profit in Canada's trade balance expanded to 1.1 billion Canadian dollars since September from the profit of 0.6 billion in August. The actual reading is below the consensus of 1.3 billion Canadian dollars. The crypto market also lacks optimism on Thursday. Low appetite for risk hurts digital assets. Remarkably, cryptocurrencies are staying afloat, consolidating previous gains. Bitcoin is drifting lower today, having dropped 0.2%. The token is trading at about $20,100. Ethereum is held in above 1,500. The second largest crypto climbed 1.2% to $1,540 yesterday. Solana, Ripple and Litecoin were more optimistic, printing notable gains, and Bitcoin is not ready for another sell-off. The intraday corridor for the token is defined between $19,800 and $20,400. To sum up, the US dollar's rally is going to set the tone on Wall Street this trading session. Hence, stocks are doomed to go down. However, investors are alerting new corporate reports and PMIs. Something could change market sentiment. Trade with profits and see you tomorrow.